Well, hi guys, welcome back to this Money Control live stream. You're watching Earnings Express with me, Nandita Khemka. Of course, TCS has kick-started the third quarter earnings season, and it's a mixed show. It was expected to be a seasonally weak quarter, as is the case for most IT giants. But given the fact that TCS has reported strong deal wins, that is the main takeaway from the earnings of TCS. Well, if you look at the profits, up 4% on a quarter-on-quarter basis. Expectations were 3%, so it's better than what we were expecting at 12,380 crore rupees or thereabouts. Margins have seen a recovery after 2 quarters of decline, so 24.5%. That's the margin that TCS has handed in for the third quarter, vis-a-vis 24.1% in the previous quarter. Money Control was working with an expectation of 24.8%, so a slight miss on that front. In terms of revenues as well, it was a slight miss at 63,973 crore rupees in terms of rupee revenue, down 0.4% on a quarter-on-quarter basis. Slight miss, and that was expected given the fact that there has been a moderation, in terms of contribution from the BSNL deal. Dollar revenues down 1.7% on a sequential basis. That has come in below estimates, and constant currency revenue has also been pretty much flat on a quarter-on-quarter basis. Well, let's put the number with the battery of experts then. First of all, let me get on board Nirav Karkera, who's the head of research at Wisdom, to understand, how big a miss or how the street actually will react to the numbers. Nirav, mixed show, but of course, the good news is the deal wins that has grown 17% on a quarter-on-quarter basis at $10.2 billion. That was the silver lining, so to say. So your take, and in terms of margins, there were quite a few tailwinds, right? So would you be disappointed with 24.5%, or are you satisfied?
So Nandita, like you rightly said, it's a mixed bag. In fact, largely the best way to describe the results is that the good thing is that there are no bad things to talk about, right? So Q3 has always been a seasonal lull, right? It has been a difficult quarter. However, things were already looking slightly different for TCS, considering how they have been committed to the cost efficiency that they've spoken about several times as well in the earlier quarters as well, right? So they've done that very well, and that is of course reflecting in the margins. But one thing, highly commendable that that is also reflecting in the margins is the deft currency management that the financial group of TCS has been doing, the financial department of TCS has been doing. We believe that the past quarter has been highly volatile, and the cross currency flows required a whole lot of robust and deft and agile management. So I feel this is these good margins are also a reflection of very good currency management and currency risk management. That's one. Apart from that, we believe that there are a few good things that TCS spoke about. Of course, the total contract value is back above $10 billion. That is a very important development considering the ramp down in revenues. This is going to be a very important piece in the puzzle, in the revenue puzzle going ahead, right? So that's the silver lining. I feel, largely I am, happy with the results because there is no reason to be disappointed. There are slight misses. I feel it's better to call slippages and not misses as such. I do not expect the street to be disappointed. At least, of course, it is. There's nothing to upbeat about it, but there's nothing to be disappointed either. So the knee-jerk reaction can also be expected to be largely muted and range-bound going ahead.
Sure, but let's also talk about segments, right? BFSI was one segment where all the optimistic commentary was surrounding the BFSI segment, right? If you look at the quarter-on-quarter contribution of BFSI to revenue, it has been a slight dip, 30.5% vis-a-vis 30.8% in the previous quarter. Is that a cause of concern? Because most of the optimism was coming around BFSI itself, right? So how would the street look at that?
So BFSI has been a focus segment for TCS, right? And as you rightly said, sequentially, it may seem like a slight miss, but there's also a lot of cyclicality and seasonality in terms of the business that is being accrued through the BFSI segment specifically. In fact, if you look at it from a corresponding period of previous year perspective, you'll see a slight improvement, right? Q3 versus Q3, right? So there are green shoots and signs of promise. Of course, sequentially, I feel there's some reason to be disappointed. But if you just zoom out a little bit and look at it in terms of corresponding periods, you will see why the TCS is now starting to gain strength in that department as well. So it's not just BFSI; it is also the consumer business group that is starting to show green shoots. So these are two verticals that we believe TCS will incrementally focus on growing from here on. Of course, the already reported set of numbers may seem like a flash in the pan sort of a moment, but there is enough and good reason to believe, also basis the management guidance that they will continue to develop these verticals, and these are good, healthy verticals that will lend a very strong stream of continued revenue to the overall PNL as well.
Sure. Let me also bring on board then Omkar Tangsile of Axis Securities is joining in this evening. Omkar, thanks a lot for taking out time and joining in. Quite a few positives as well this quarter, right? Even though revenues are slightly below estimates, but that was something that was largely on expected lines. Margins have grown after 2 quarters of decline. And of course, as I mentioned earlier, we were talking about deal wins as well. $10.2 billion. It has crossed $10 billion. In fact, I think this is the record Q3 deal wins that the company has seen. Your initial thoughts, would you be happy with the numbers in terms of margins? What were you expecting?
I mean, the numbers are largely in line with my expectation. I mean, with our expectation. The only thing is that I mean the revival in the management commentary and revival in the discretionary spend, and the revival in the demand side, the client engagement is increasing. That these are the positive signs. Are the one should be looking at. I'm not quite happy about the deal wins that they have won during the quarter, because when there was a demand sluggishness, there was also a deal wins were quite high. The only thing is that the engagement was not improving with the clients, because the expenditure was on the hold. So one must should consider that it will take some time. So we believe that there might be a revival which will be happening from Q1 to Q4 FY25 to onwards. But there will be an improvement in the engagement, but it will slowly and gradually will pick up in the demand side.
All right. Fine. I also want to talk about the headcount decline that the company has seen in excess of 5,000. That was after 2 straight quarters of headcount addition. And the attrition rate has also gone up to 13%. Put this in context for us. What does it really mean for demand? And also in terms of hiring, they'll have to go a little more aggressive, right? And so how does that really bode for margins?
That no, I am not quite worried about the hiring numbers, because that can pick up from the next quarter onwards. To be at in this quarter, which is considered to be a seasonally weak quarter, so that's why that might get an decline in the number of hirings, but that is not a cause of worry. That what I believe is the demand side. I mean, the Milind Lakhad has already mentioned that they are continue to hire from the freshers, so they can put more number of the people in the bottom line of the pyramid, and they'll get the margin expansion going ahead with the growing volumes. So I'm not quite worried about on the attrition rate, and quite worried. But yes, definitely. I mean, I love to hear the commentary from the management, especially from the Northern American side, excluding the BFSI vertical. I mean, excluding from the BSNL vertical. What outlook is likely to be? The TC, how engagements are looking forward. So that might be a things that one should be considering for.
Right. Nirav, coming to you then, what would you be watching out for from the management commentary? Anything in particular that would come as a negative surprise, according to you?
So, of course, there are expectations from the management commentary, but I'm not expecting any rude shocks or negative surprises. I am expecting, though, a whole lot more clarity on, certain regions and, the plan for building certain verticals. Of course, we know we spoke about their commitment to building the BFSI segment. We are seeing green shoots in the consumer business segment, but probably some more light on the plan of action there. And, apart from that, probably some more, details on how do they plan on expanding their regional presence. And, we see India as a region has delivered solid growth while most other regions have been lagging. So what's the plan and roadmap for expansion into the regional strategy? Probably these are two key pointers that I would be on the lookout for. Apart from, of course, what can we expect in terms of a revenue trickle down from the newly acquired contracts as well? So, we know the bill to book is looking good, but how, what can we expect in terms of timelines of execution of existing contracts, and what is the revenue trickle down timeline plan of action thereon? So these are a couple of things that I'd probably be interested in hearing from the management committee, and there's good reason to believe most of this will be.
Just about a few minutes to go for the presser to start. I want to just ask Omkar, whenever you had a chat with the management earlier, have they hinted at consumer discretionary spending extending beyond BFSI? Are there any signs of that happening?
Yeah, I mean, the management for this quarter results also, they have mentioned that there might be a revival in the discretionary spend, but that is, slowly picking up. Yes, there might be a green shoots, and there might, encouragement into the overall atmosphere going ahead. But I do not see an, extreme spike is likely to come for the next couple of quarters at least, but it will pick up slowly and gradually over the period of time. Yes.
Right. Nirav, after looking at TCS numbers, we know that IT stocks have done phenomenally well, at least in the second half of 2024. And also over the last 2 years, we've seen the IT index clocking 20% gains, right, each year. Here on, do you think whatever recovery takes shape, do you think all that is already baked in? And in addition to that, we've also seen Infosys outperforming TCS, both in terms of stock price as well as earnings performance. So between the two, looking at all the parameters, which one would you choose? What's the pecking order?
So, also TCS is trading at a discount, right, for very obvious reasons. There's a very high degree of likability for NP. But before we can get to a choice between the two, the outlook on IT remains constructive. At this point, we believe, of course, the pricing seems to reflect an aggressive pricing in of growth in earnings as well as revenue growth. However, at this point in time, considering the valuations and where the prices are at this point, there seems to be a larger scope for surprises on the upside versus shockers on the downside. So the trade-off is looking pretty much in favor of the sector right now from a risk to reward standpoint. Also, right. So that is one thing. We believe that that TCS earnings have kickstarted the Q3 print on a slightly reassuring note. I wouldn't call it a positive note, but considering the amount of caution that was already in the air, considering the Q3 seasonality and TCS the way it has been going, I feel some of those frayed nerves have been calmed down. So this augurs really positive for the rest of the sector as well, for the rest of the pack as well. So I would say aggressively priced in. Yes, most good news is aggressively priced in, but the probability of surprise on the upside is far more than shockers on the downside. And apart from that, if we have to make a choice between TCS and NP, I'd say that NP is trading at a premium for a reason. And unless in this quarter and in the near term, NP gives us a reason to believe otherwise, there should be an incremental preference for NP versus TCS, right? So, in absence of any adverse reasons to believe otherwise, we can expect the trend to continue.
Omkar, would you also prefer Infosys over TCS? And in the larger scheme of things, top four companies, HCL Tech, for that company, third quarter is strong, given the fact that there is strength in the products business. So, would you be looking at an Infosys TCS, or would you go for HCL Tech right now?
No, I'll definitely choose Infi over the HCL Tech because the discretionary spend content is very high, and also the Nirav has correctly mentioned the Infi is being favored because the gap is being narrowed down. They are performing well, and I mean they have the higher contents of discretionary and execution capabilities as compared to the other verticals. So might get an the larger the growth rate as compared to the other large cap peers. I believe HCL Tech is also a promising player as compared to the other verticals. But definitely, I mean, the product business is not a consistent one that is they are performing. I mean, year-end spends we might face, and some slowdown in the European side, and year-end it may go down because of that might hamper some contribution to the top line growth. Of course, for this year, HCL Tech will likely to outperform all the large cap peers, but in a longer run, if you can say, the Infi is a better bet too.
Sure. Waiting for the presser to start, but let's talk about TCS margins once again. 24.5%. That's where we are back at that level. The management has consistently been, looking at achieving exit margin of 26 to 28%, but hasn't really been able to do that. Now that the recovery has started, at least for FY25 in terms of exit margins, can we expect 25% at least, if not 26% on the upside? Nirav, you can take this one.
Yeah, so of course, the 24 plus percent is reassuring. I would like to say that just because it was largely on expected lines doesn't change the fact that it is a good number, right? So that's one thing going in favor. I feel and also we spoke about so it's not as much about the 24% as much as it is about what has gone into delivering the 24%. Right, there have been quite a lot of challenges, but cost optimization, efficiency activities. There's a lot of forex currency management that has been done. All of these are very good signs that is working in favor of that. Right, so that is one thing. That is boding really well for TCS. On the flip side, the ramp down pressure from the BSNL project is something that can be expected to weigh down. So your expectations on the on the exit margin could face some sort of a roadblock, or not a roadblock, or at least a speed bump in terms of being a damper. The probability of achieving it is clearly not a cakewalk. At least I'm not saying it is impossible, but it's not going to be easy. Could be some favor from the currency gods and deft management on the currency side, and ability to quickly further create better efficiencies to deliver upon the next set of contracts could concoct a situation where we could probably just touch the guided margins, right? So I believe that there is a good case for us to just barely reach the finish line that the management is expecting, but it is not given at this point. It is fraught with a lot of challenges at this point.
Omkar, what kind of a reaction would you expect on the stock, even though it was largely on expected lines, even Stevens, so to say? Would you expect any kind of sizable move on the stock, or would you expect it to be sideways?
I don't believe that one can see an large move, whether it is on up or down, because the market was much anticipated such kind of results during the quarter. But the kind of markets that the currently we have on a broader sense that can drive the stocks as well. But I think the outlook remain constructive, and likely to be have a revival. So one can refrain the limit the downside from the current levels, but in case I believe it's more of a positive side on not only on the current scenario but also on outlook side, or let's say for FY25 or FY26 onwards. So I do not see any strong upswing or downswing going to happen during the market. But yes, the commentary looks to be positive, and one can see a revival in the IT sector going ahead. Yes, in a longer run.
Sure. Infosys is the next one, the big one. In fact, next week we have a slew of IT numbers. But particularly in terms of Infosys, what kind of a revision would you expect in terms of guidance? What is the kind of range you are working with? Because most of the brokerages are expecting the company to revise its guidance upwards. Omkar, you can take this.
Yeah, I'm not expecting it to, revise the guidance range, but I believe it's more of narrowing down the guidance range on the upward side. So we are not expecting it to grow on a much larger side, but it's narrowing up, and the margins we are expecting the likely to be remain same for the previous call. I mean the previous guidance.
Sure. Neerav, I'll come to you and talk about mid-cap IT as well, because stocks like Persistent, Coforge, they have seen phenomenal up move, and in terms of earnings expectation as well, the growth is expected anywhere between 4 to 5%, better than larger peers. But don't you think that the kind of run up that these stocks have seen, every good news must already be priced in, and should one adopt a sell on rise strategy when it comes to mid-cap IT now?
See, one thing I can say for sure, of course, right at the outset, I do not think sell on rise is a good strategy. And that, let me get that very clear, of course. But having said that, I feel there is good reason to believe, like you said, that most good news has already been priced in, right? Because with midcap IT, the narrative is also slightly, running ahead of the reality at this point in time, and we have a lot of expectations and earnings to really catch up with that expectations. The gap is pretty wide, so there is enough and good reason to believe that midcap IT's run up from here on, the trajectory continuing an upward trajectory is going to be a difficult one and an uphill task, quite literally going uphill from here on, right, for mid-cap IT. There needs to be a set of positive trends to really, bolster from here on. However, very selectively, there are still pockets of opportunities for those willing to, chase growth. There are pockets of opportunities in mid-cap IT, but largely at an aggregate basket level. We believe the best way to look at it is with a lot of cautious optimism at this point in time. So while the optimism comes because the IT pack itself, the tailwind from the IT pack will move in its favor, but the valuations and the larger mid-cap pack, the factors affecting the mid-cap pack could be working against it, right? So a bottom-up strategy on mid-cap IT would need to be we would need to assign larger weightage to a bottom-up strategy in mid-cap IT very specifically, right? So, like you said, most good news already priced in, and from here on, trade cautiously. Uphill task going ahead, and cautious optimism is the way to trade this course.
All right, that's the view then. On that note, I would like to thank you guys for taking our time and joining in this evening. Look forward to interacting again when more and more numbers trickle in. Thank you. Thanks a lot. But with that, let's cut across to the management commentary then.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Hello and a very warm welcome to the third quarter FY25 earnings press conference of Tata Consultancy Services. We're very happy to have everyone here. We have a journalist from Mumbai joining us in person, and we also have several stakeholders joining on our social media platforms. We want to begin by wishing everybody a very, very happy New Year's. The management is here with us. We have K. Kritivasan, MD and CEO, Samir Seksaria, our CFO, and of course, our CHRO, Milind Lakkar. As always, we'll start the press conference with the opening address from our CEO. Kriti, the floor is yours.
Thank you, Kritika. Good evening, everyone. Would like to start the meeting by wishing all of you a very, very happy New Year. So in Q3, we saw the macro factors of Q2 continuing, coupled with the seasonality. In this backdrop, on the constant currency basis, our revenue grew by 4.5% year on year and remained flat on a quarter-on-quarter basis. Our rupee revenue grew by 5.6% year on year to reach 63,973 crores. We achieved an operating margin of 24.5%, an expansion of 40 basis points despite the seasonal headwinds. This translates to 15,657 crores of operating profit. Our net margin for the quarter has come in at 19.4%, translating to 12,380 crores. Consequently, our EPS reached 34.21, up 6.4% year on year. Cash from operations at 13,032 crores, represents a conversion of 105.3% of net profit. Given the seasonal weakness and softer discretionary demand environment in this quarter, most of the verticals and markets saw a sequential negative growth on a quarter-on-quarter basis. On a year-on-year basis, UK grew by 4.1%, North America by -2.3%, and continental Europe grew by -1.5%. The new growth markets of India, Asia Pacific, Middle East and Africa, and LATAM continue to deliver a good growth, offsetting the weakness in major markets. Particularly, our revenue from India grew by 70.2% on a year-on-year basis. Among the verticals, on a year-on-year basis, BFSI grew by 0.9% and consumer business grew by 1.1%. Energy, resources and utilities grew by 3.4%. TCS banks and products and platform continued their growth momentum. Life sciences and healthcare and communications and media continued to have negative growth on a year-on-year basis. Our customer metrics remain strong and resilient. The number of customers from whom we make more than 100 million rose by 3 to 64 customers on a year-on-year basis. There has been a strong customer movement across all other brands as well. In addition, our customer base of 1 million plus stands at 31,309, an increase of 21 over last year. Our order book closure for the quarter stands at $10.2 billion. Our order book for North America stood at $5.9 billion, and for BFSI $3.2 billion, and consumer business at $1.3 billion. This represents a strong order book closure of over Q2 and Q3 of FY24, giving us a confidence and comfort on the outlook for the future. By the end of Q3, our net employee count stood at 607,354, a reduction of 5,370 on a sequential quarter-on-quarter basis. Our IT services attrition stood at 13%. The board has proposed an interim dividend of 10 rupees and a special dividend of 66 rupees, amounting to about 27,500 crores. This is in line with our practice of returning 80 to 100% of free cash flows back to our shareholders. We are seeing continued momentum in AI adoption. Clients are increasingly investing in agentic AI adoption, building robust data foundation, and taking a value chain-based approach for AI and Gen AI-led transformation. We have launched an innovative offering, TCS 5A framework for responsible AI with AWS. This is the first of its kind in the industry. It helps identify and mitigate AI risk holistically. We also saw an increase in successful production deployment of AI Gen AI engagements, leading to greater business certainty and confidence for our clients. Our investments on research and innovation continued. In Q3, we applied for 195 patents and were granted 216 patents. Overall, 8,549 patents have been applied and 4,585 granted. With these updates, I hand it back to Kritika and we can open it up for questions. Thank you. Kritika, over to you.
Thank you so much, Kriti. We'll start with the Q&A. As always, we have Rima Tendulkar from CNBC TV18 going first. Rima, 2 questions.
Yeah. Gentlemen, Happy New Year and congratulations. So Kriti, first question is, growth ex of India was under pressure. So what were the reasons for that? And also your press release reads that there are early signs of revival in discretionary spending in some verticals. So explain that to us and whether deal wins can sustain above $10 billion. Samir, how did you manage to expand margins when there was no growth and the outlook on margins from here on? And Milind, how should we read your headcount declining when attrition went up? And what is the outlook on headcount addition and attrition going ahead?
So Rima, first, yes, as I said, we had negative sequential growth in all geographies, all major geographies. And to some extent that had a seasonality. And we've been calling out the trends in Q3, most of Q3, were showing a softness in discretionary demand. So both these contributed to the negative sequential growth in all major markets. But the point that we wanted to emphasize here is the TCV going up after 2 quarters. and TCV going up in North America, going up in BFSI, CBG. All of them portend well for our, at least gives us a confidence on medium term. And we also been seeing improvement in sentiments on discretionary spend. I did talk about BFSI and consumer business, but we've been seeing it yearly trends in few other verticals also. So overall, that's what is giving us a confidence on future. Our pipe, I don't want to put a number, our pipeline continues to remain strong. So there are enough opportunities to sustain the deal wins. At a broad level, seeing what we are seeing today, we would be comfortable in saying CY25 should be a better year than CY24.
Okay. Coming to margins, Rima, in spite of the furloughs and Q3 seasonality, we were able to improve our margins by 40 basis points, and that was purely driven by operational efficiencies coming in from productivity, utilization, and pyramid. And while these levers helped us in this quarter, they do provide further opportunity. And through the year, I mean, in the next quarter also, we'll be banking on this lever to improve our margins.
With respect to headcount, Rima, I think, as I said earlier quarters also, and there's no direct, linear correlation with the growth and headcount. And as you know that we have added net 11,000 people in the Q1 and Q2. We also basically on track to get our campus hiring on track of 40,000 people in this year. And so the point is, headcount wise, this is something which is a result of many things, including what Samir said: productivity, utilization, and pyramid. And the number is what it is. With respect to attrition, it is at 13% within our comfort range. Going forward, I anticipate reduction in the quarterly attrition going forward. LTM numbers may go up and down based on how it is calculated.
All right, thank you. Next question to Sajid Mangat, NDTV Profit.
Kriti, Happy New Year. You spoke about the fact that you entered Q3 with some of the macro factors like discretionary being slow. As you enter Q4, what are the macro factors looking like, and do you see improvement on those factors for Q4 and CY25 as a whole? The second thing is about the TCV, $10.2 billion, impressive number. If you can give us a breakup of BFSI wise and geography wise, because while TCVs are growing, you're seeing a flat growth in BFSI and North America. So there's a difference in order wins coming in, but revenue recognition which is coming in for these two. On margins, you did mention about cost efficiency. If you can give us an idea of how you manage the currency being so volatile, and do you see what kind of hedges you have, and for FI or CY25, what kind of outlook you have on the currency? And Milind, on employee count, you mentioned the fact that it has nothing to do with the growth, but what is the kind of salary hike, if at all you did anything in Q3, and the gross additions that you expect in CY25, given that the campus placements would have been completed by now?
See, on the discretionary spend, while Q3, whatever we saw in Q2 continued, the softness in demand. But looking at the order book and our conversations with our customers, it gives us the comfort that there is more budget, discretionary spend is likely to increase, and we are seeing early signs of improvement in discretionary spend. And we saw to some extent, even though the overall BFSI growth has been negative, we saw the growth in North America and BFSI to be positive. So that also we take as a yearly sign. So yearly signs on discretionary spend revival. I don't want to call it that it is recovered fully yet, but there's a yearly signs of revival. And on the TCV front, as I mentioned, our North America order book was at 5.9 billion, and BFSI at 3.2, and consumer at 1.3. All of them substantially better numbers than corresponding period last year. We're not being disclosing the number. These are the three numbers that we've been disclosing on TCV. But Continental Europe had one of the strong TCV wins this quarter.
From a currency perspective, you are right. We saw considerable cross-currency movements, and dollar appreciated against most currencies, almost all currencies globally. Rupees defense or the depreciation against the dollar was lower than other major basket of currencies which we had, and that's where we saw. If you see from a revenue perspective, the reported revenue is lower than the constant currency revenue on a sequential basis by 40 basis points. Margins were flattish, and our consistent hedging policy is something which helped us. It's a policy where we limit the exchange volatility through a consistent hedging program, protecting our revenue and forecasted receivables. And what we do is a rolling quarter forward hedge. Well, we'll not look at it because it's a multiple of factors. Our focus is to have a policy which will, limit the volatility on our P&L.
The salary hikes, we do it at the beginning of the fiscal year, which we have done, right? Which we have done. But we have been doing promotions regularly. We have done 25,000 promotions this quarter. If you look at promotions year to date, we have done 110,000 promotions, this financial year. So salary hikes are done at the beginning of the year. Promotions are done through the year, and a good number. Gross additions for the coming year, like I said, we did 40,000 campus hirings. We are on track to do 40,000 this year, this financial year. Next financial year, we actually will do slightly more than that. We don't give away that, but it's one set of national qualifier tests is already done, and from our priority colleges, and a good number of offers have won. Overall, the number I expect to be more than last year.
Thank you. Next question from Shivani Shinde from Business Standard.
Hi, gentlemen. Happy New Year to all. Hi, Kriti, a couple of questions here. One is on the India market, again, grown pretty fast, and it's the regional markets again, which is driving the growth. Assuming India is obviously BSNL deal, we are hearing that is going to now come towards an end. How sustainable is this growth that you are seeing in the regional markets? If you could comment on that one. Two, the most awaited date is 20th Jan, when the president-elect takes over. And a lot of concerns already coming out. H-1B visa, what happens to the budget? Anything that you're hearing from your clients or what your sales team is saying from US, if you could share with us. One is that. So two questions for you.
Yeah. So
I'll come to Samir.
Yeah. On India, definitely we're happy with the regional growth. And in this quarter, growth in India is contributed primarily by non-BSNL. BSNL had a substantial share, but the growth was contributed. BSNL didn't have a substantial contribution to our growth numbers in India. There is a seasonality in India market as well. So that's what played into in this quarter. And we are quite bullish on the regional markets because they've been consistently growing, though on a smaller base, they've been growing. So BSNL, while was not the main contributor. On the budget, it's a very, very early indication. Our early indication is there is a positive bias for the coming calendar year. But like you said, early days, we have to wait and watch.
Samir, you said that you still have headroom when it comes to margins, operational efficiency. Could you just elaborate more on it? I mean, with growth being slightly tapered, especially from your major markets, what's the headroom that you're seeing? Milind, strong numbers that you're saying for next year. You're saying that effort to onboard a higher number of campus hires. Would you want to share the numbers? Any indication of 40,000? How many more?
You want to go first?
So, okay, yeah. So from the operating parameters or the operating levers which we talked about. So if you saw, we hired about 5,000 each in Q1 and Q2, but we had an efficiency coming in Q3, and that should have an effect coming in Q4 as well. We have been working on the overall pyramid. We are looking at ways and means of productivity. If you look at traditionally on the realization, we have been improving it. This quarter's realization has been flattish in spite of the seasonality kicking in. So these are the levers which I have been working on.
So I think the number will be higher than 40,000. Exactly what it will be, I will let you know. So this, we'll come closer to that.
All right. Next question from Beena Parmar from Economic Times.
Hi, Kriti. You've seen a sequential drop in the large client base as well. Could you please elaborate as to how sustainable is this? Is it just seasonality, or do you see this long term going forward? And in terms of your demand pickup, you had mentioned that BFSI is looking up. We've not seen much growth as such while it has come to positive. Which segments do you see further going forward picking up growth in the next 2 quarters, which will drive
Within
the growth
BFSI or
apart from BFSI?
apart from?
And if you could also elaborate your Gen AI deals and revenue momentum, what kind of progress have we seen? And overall, are we likely to see any more applications on the H-1B visa as well? What's the status? How has it been so far? And how does FY25 look like? Milind, if you could just tell us, what are the primary reasons for the drop in hiring? I mean, we've seen 2 quarters additions, and suddenly we are seeing a drop. How should we read this? Is this likely to go on in terms of the reduction? Is it because of Gen AI? Could you give us some color on, how do we see that momentum going forward, even as freshers are kind of picking up? Aren't you doing any backfilling? Could you give us some sense on that?
Okay. So first on the large customer base, there was a small drop, and one is because one particular large customer, there was a divestiture, so it split into 2. So it became both, though the revenue was not lost, like they are not a $100 million customer anymore. And there was one more was a small drop but it's a planned reduction. So I don't read too much into it. Like overall, I think this will crawl back, and as growth comes in, you would see some of the customers who are in the 90 million range moving it. So that I don't read too much into it. I said BFSI TCV, then obviously consumer business is also where the TCV went up. And Europe as a segment, we find TCV has gone up. So there have been, in fact, almost all verticals. The TCV has shown a very healthy growth. So it is not necessarily only BFSI. Medium to long term, growth should return in multiple verticals. Gen AI, like the momentum is continuing. It's becoming more and more mainstream. That's the reason we didn't want to call out any specific number. And but it's also maturing. Like early days for last year, we were talking about simple fine tuning. Then people talked about RAG and all. Now the agentic AI is becoming more and more common with the improved capability of these LLMs. So more complex tasks are being performed, and we also seeing kind of projects that we do. One of the projects involved about drug discovery, where we were able to help one of the customers identify 1,300 molecules, and out of that help them in further filtering them to 12 molecules for which they can start the assessment. So work is becoming more complex, more rewarding. So overall significant growth and a lot of participation with our customers. On the H1B, I would let Milind respond to that question.
Okay. I think we have a global operating model, and we have a global workforce. We have been driving this for many years, and a very strong model in place. So our dependence on H1B, is limited, and while we obviously want to provide opportunities to people, but eventually depending on the visa category, I don't think that is a major concern for us, because we have a global model in place. With respect to your second question on the headcount, like I said earlier, headcount is not has no linear correlation with the growth in a quarter. It is a yearly phenomena which we do. When we added 11,000 people, like Samir said, and this quarter it is a function of pyramid utilization, productivity. All of this coming together eventually results in a certain headcount, and that is what it is. So don't read too much into it.
Backfilling was done.
We actually no, but the point is, utilization is there, productivity is there, all of that contribute to backfilling. All of that contribute to backfilling, and going forward, the outcome, the phenomena will be similar. The headcount will go up a bit based on all these other parameters we play, but one thing I would like you to know that there's no direct correlation with the growth.
Samir, if you could just give us a sense, where do you see margins going forward, given that growth is picking up? Are we likely to see it, kind of see some decline going forward, and by when?
So growth is definitely a margin lever as well. And in a state where growth is good, we are able to take a lot more efficient actions. Overall, we stay committed to our 26 to 28, which we have guided. And as things improve, we should be coming closer to the 26% mark. I can't commit a specific timeline, whether it would be a 1 quarter or a 2 quarter or a 3 quarter phenomenon.
When do you see this 26 to 28 by?
As early as possible.
Thank you. Next question from Chris K from Financial Times.
Hi there, and Happy New Year.
Hi.
Obviously, there was some weakness in North America. Are you expecting a Trump bump going forward?
I don't want to call it Trump bump, but as I said, our deal bookings have been good, particularly in banking, financial services, and in North America. And once the new administration comes in, that will also remove any uncertainty, because once the policies become clear, that would give that would really lack of direction would be removed, was our hope. So all of them put together, we see there would be more confidence in discretionary programs coming into the next financial year.
Do you expect, there's obviously expected corporate tax cuts, and a lot of your peers have said they're expecting more business off that. Is that what you're forecasting as well?
No, we are not. See, though some of those things which are beyond our control, we handle them as they come. We don't work on multiple. See, we know on different scenarios what we may have to do, but obviously we cannot over-plan on those.
Bangana Ghosh from MoneyControl.
Hello, gentlemen. Kriti, my first question to you is, I think most of it has been asked, but I would still want to know a bit more on how 2025 is going to pan out for Gen AI and AI use. You mentioned agentic AI, but we are also seeing TCS is doing a lot of partnerships with NVIDIA plus Google's quantum computing chips coming in. So what's that going to look like? My question for Milind, how much of the headcount decline was due to furloughs? Will we see furloughs spill over in the upcoming quarter? And for Samir, I think most of it has been asked, but
Don't ask the
Right, I think no exit margin I wanted to know more about, but that has been asked. So I would want to know more about how the weakening rupee is going to impact the margins in the upcoming quarters.
On Gen AI, like we probably will see more and more adoption, and adoption will be becoming correct. At this time, you saw some early pilots, everyone wanting to try out something new. But now this will become more and more purposeful. Like what we are doing within TCS is taking each industry segment and looking at each value chain and saying within the value chain where generative AI can help, or in some places even the value chain can be restructured, like the whole value chain could be disrupted. What are those opportunities? And we are going to our customers, we are experimenting internally, we built our Wisdom Next platform. And of course on the software engineering side also, we are experimenting in terms of improving productivity. I don't want to put the number because these are also at this last quarter we mentioned it was about 10 to 12%, but slowly it's improving. Okay, it's not there to say 50%, 60%, but those numbers are improving. We are seeing more programs and more percentage of programs going into production. So it's a sign of both maturity of the technology and the confidence our customers have in these technologies delivering the value. So that would be a slow progress. When I say it will be a gradual process, right? And that's happening as expected. What is the other question you had on? That's Milan, right?
No, I think no headcount impact because of furlough. That doesn't happen. People go and people come back.
Coming to regarding the weakening rupee, right? So actually, if you look at this quarter, there's a lot of talk about rupee weakening, and we did see, because it's usually most of us benchmark only to the dollar. But our portfolio has dollar revenues, GBP, euro, and a lot more currencies. The rupee actually appreciated against currencies like GBP, euro significantly, to the extent it completely took away the benefits of weakening rupee which come in on a dollar perspective. The generic one in terms of what happens on a consistent rupee depreciation, yes, it does provide support on the reported revenue as well as margins.
Thank you. Next question from Varun Sood from Mint.
Hello. Hi, Kriti.
Hello.
3 questions, sir. Firstly, you clarified that we had one of the large 100 million plus clients which got divided into 2, and perhaps that number reflects that as if it's a slip. Another client maybe because of foreign currency fluctuation, but if we look back sequentially, the 50 million plus clients also and 20 million plus clients also, that too has dropped. In the last 9 years, 10 years for TCS, quarterly, this has never really happened. So I'm just trying to understand, is there more of specific client-led impact which led to such a disappointing performance? Because in the last 9 years, I believe this is your worst third quarter performance. Furloughs and seasonality is there every year. But this time the numbers look really bad. So is it just, I'm just trying to understand how much of it is macro or how much of it is TCS specific clients? Any commentary on this and what does this entail for Q4 would be appreciated. The second point, you mentioned CY25 being better than CY24.
Yeah.
You see, at the start of the year, it was unanimous view that FY25 will be much better than FY24. But again, if we look at the numbers, last year you did 4.1. This year, first 9 months, you're doing 4.6%. Incrementally, not much better. Where has really all the commentary over the last 6-7 months, where has all that demand optimism gone, where perhaps your growth is almost similar to your weakest year last year? And the third point, sir, almost all deals, and you and your peers have said that there is some element of Gen AI. What I'm trying to understand is that since now many of your deals, renewals will happen, just like for any IT services company, is there any impact of Gen AI, say, on clients seeking productivity gains and hence leading to a margin pressure or to less business or finally leading to any kind of pricing discounts? Have you witnessed it or do you anticipate it in the next 12 to 15 months? Thank you.
Thank you. So first on the client metric, Varun, I did not mention I did not say that it's because of the currency. One where there was a divestiture, like client divested a large portfolio, like the overall revenue did not shrink, but it got split into two accounts, but neither of them is 100 million plus. So that's the reason that one of the two reductions, one reduced because of the divestiture on the client side. The second was the planned ramp down, like which we are expecting. We know that's likely to happen. But agree with you, there have been reductions in the other bands also. But when
Currency does play a role.
currency does play a role in some of them, and also when you have a reduction in we have a flat revenue growth, and I said almost all industry verticals had a sequentially negative growth, which would impact some of the larger accounts in some other cases where that can drop marginally from the 50 million band to even if it comes to 49. So there are, because of the some issues in terms of revenue decline in the large geographies, you would see that. But the that comes back to the next question on, in fact, why do we feel confident about CY25? You see the more confidence in the customer in terms of discretionary spend, and which we are not seeing in the last few quarters. And we also saw the overall deal cycle reducing by a few weeks in this quarter compared to previous quarters, and the mix of deals that we are winning, that also has a slight increase in terms of discretionary spend. All of them put together makes us believe that clients should be more focused on change the bank or transformative programs than focusing only on optimization. If you're asking what happened in CY24, in fact, yearly from Q1 on, I'm sorry, if FY25, if you take from yearly Q1, Q2 onwards, we've been saying there has been a softness in discretionary spend. It's not that it came as a surprise. We thought FY25 will be better than FY24, but it did not pan out the way we expected. Again, we can tell you what we are seeing as of today. We are hopeful for CY25 to be better than CY24 based on the yearly indications we are seeing. And we will continue to give the commentary as we see them, as they change. Like, we are not holding back anything. On the deals and generative AI, most of the large deals will have a component of generative AI. But at this time, we are not seeing any pricing pressure because of that, because many clients also want that to be part of their larger architecture and ecosystem so that they are future ready. At this time, we are not seeing any pricing pressure. Our long-term assumption is generative AI will help our customers and help us do more work. So net it would be positive on demand than being negative, thereby causing a pricing pressure. So at this time, we are not assuming that to cause a pricing pressure or a demand softness.
Ekta Suri from Z Business.
कृति, मेरा सबसे पहले आपसे क्वेश्चन होगा. हमने आज ही एक न्यूज पढ़ी कि वॉल स्ट्रीट जो है 2 लाख जॉब्स जो शेड हो रही है, उनमें से एआई एक मेजर रीजन है. हम एआई के बारे में यहाँ बहुत बात कर रहे हैं, तो आपको लग रहा है कि कुछ ऐसा इम्पैक्ट इस साल, क्योंकि एआई दिन ब दिन बढ़ता जा रहा है, हम इंडिया में भी देख सकते हैं?
Job loss?
Yeah.
As I said, I was telling Varun, like our going in position is AI will create lot more new jobs, but they may not see. There could be some jobs, there will be a change in profile or the role of jobs. The same jobs may not exist. If AI can do a better summarization of a document, some back office person summarizing may not be required. But it can also create new kind of opportunities, new kind of jobs. So net it is going to be positive. There will be job shifts, right? Like testing could get automated, but you will have less of testers, but you may have more people that have to train the machines, that have to be the validation of these AI algorithms, or somebody who can create the model as for our customers. So there would be, our view is at a gross level, it will be positive. There would be changes and shifts in the individual jobs that people do.
और दूसरा, हम बहुत सारा रेगुलेटरी एक्शन भी देख रहे हैं. बहुत से सेक्टर्स में एआई का अगर इस्तेमाल हो रहा है, जैसे बीएफएसआई में भी रेगुलेटर जो है ड्राफ्ट रेगुलेशंस लेकर आ रहे हैं. तो ऐसे में आपके जैसे इंडस्ट्री प्लेयर्स कितने तैयार हैं, अगर आपने कोई मॉडल बनाया है तो उसे ट्वीक करने में, सो दैट इट जस्ट अडैप्ट्स द न्यू guidelines or the what regulator is seeking?
Like I did mention, in fact, we released a framework, what we call a 5A framework for responsible AI, that will help our customers in adopting to these new regulations. We released, it's a first of its kind. We released it along with AWS, and so we would help our customers in aligning with the regulations in every one of those geographies, and we believe that we will be able to leverage some of these automated tools to ensure that the regulations are complied with.
और मिलिंद हमने 2024 में ये बहुत देखा कि बहुत बड़ी बड़ी टेक कंपनीज ने लोग को कैंपस हायरिंग तो बहुत की, लेकिन उन सब फ्रेशर्स की जॉब शुरू नहीं हुई। तो हमने देखा कि बहुत से एसोसिएशन के दरवाजे उन्होंने खटखटाए कि हमारी सैलरीज शुरू नहीं हो रही है, वी आर स्टिल वेटिंग टू गेट एब्जॉर्ब बाय द कंपनी इवन दो वी गॉट द लेटर। तो 2025 आप किस तरह से देख रहे हैं उन सब फ्रेशर्स के लिए जिनको शायद अभी भी होप है कि जल्द से जल्द ज्वाइनिंग होगी?
पूरा हमारा ये प्रोसेस है ना, हमने 25 के लिए ऑलरेडी एक नेशनल क्वालिफायर टेस्ट हो चुका है हमारा, एक आधा और शायद वन मोर विल डू, उसका पूरा दे विल फिनिश देयर कोर्स एंड दे विल गेट बैच्ड इनटू व्हेन दे कम इन। दिस इज अ प्रोसेस वी हैव बीन फॉलोइंग फॉर मेनी इयर्स और वो कंटिन्यू होता है। एक बात पक्की है कि हम जो ऑफर को ऑनर करते हैं उसको वी ऑनर ऑल द ऑफर्स व्हिच वी गिव
within the same,
yeah absolutely, and वो बट उसका बैचिंग होता है, तो उस बैचिंग के लिए थोड़ा सा वेट करना पड़ता है, वो तो एक रेगुलर प्रोसेस के थ्रू करना ही पड़ता है।
तो इस साल वेट कम होगा, वेट बढ़ेगा?
इट विल बी सिमिलर टू व्हाट हैज बीन डन इन द पास्ट।
और एक आखिरी क्वेश्चन, बीइंग वन ऑफ द मेजर प्लेयर्स इन इंडिया आईटी सेक्टर, आपकी बजट से क्या एक्सपेक्टेशंस होंगी?
See, as such, we normally don't have to put specific expectations, okay? And anything that can make doing business easy is always welcome for us.
Thank you, sir.
Ashish Agashe from PTI. A request to everyone. We want to try to accommodate everyone, so stick to 2 questions, please.
Thank you. So you mentioned that a significant portion of the India growth has come not non-BSNL, and there is some seasonality to it. One, where is it coming from? And if there is a seasonality to it, and assuming that BSNL also tapers from here, so what sort of a consistency or sustainability in this growth do you see? One, and second quick question. This has been attempted multiple times, but so how, like, having significant base in the US, looking at the US as a major market, how are you broadly preparing for the new presidency? There's lots of commentary, lots of concerns around that. How are you preparing?
Yeah. First is yes, we are expecting BSNL probably must have reached its peak and slowly taper off quite fast as well. But as I said, we are seeing growth elsewhere, and we are very confident of the regional geography. So with the global growth that we are expecting, we should be able to handle this down to a reduction in revenue coming from BSNL. We are not too worried about it because we are also finding more opportunities in India to replace that revenue, India or other regional geographies as well. And I don't have a specific answer on how we are preparing because one, we are engaged with all our customers. We have close discussions with our customers on their needs and how we can help them in their future plans. Two, as Milind explained, our dependence on H1 visa itself is quite low. So we are not expecting any major disturbance to our business. So that's at least our going in position. If there are any changes that we have to plan for, we will plan at that time. At this time, we believe business as usual for us from a overall regulatory perspective.
Thank you, Ashish. Haripriya Suresh, next from Reuters.
Just a couple of clarifications. North America, yes, it's down YOY about 2-something%. BFSI we've spoken about, but what are the sectors where pickup is still a little ways away because sentiment is still subdued? That's one. Two, is there a GenAI, at least a deal pipeline number, if nothing else, in terms of, because we've been talking.
So what is the question?
GenAI, is there a pipeline number, at least in terms of the deals? Because we have been talking about, conversion.
Yeah.
And is there a time you see yourself actually calling out a GenAI deal pipeline number? Like how far away would that be? And emerging markets have performed very well for you this time, but would we see this kind of outperformance continue? I know that it's on a lower base as opposed to America, but do you see emerging markets sort of outperforming this sort of trajectory continue? My final clarification, there's been a legal claim of about 950 odd crores that's been provisioned over the last couple of quarters. Is this towards any of the lawsuits we know? What would this be for? Yeah, thank you.
The first question was on BFSI.
Which sectors is still damping?
Damping.
Which is still dampened, like where there's not pickup yet, barring BFSI.
I would say damp, no, but where there is still wait and watch, definitely healthcare, because that is very policy dependent in US. So healthcare is something that we are there's a wait and watch mode. Like once the government policies become clear, we expect discretionary spending to pick up in healthcare is one sector. Most other sectors, maybe manufacturing is another, but we expect that to be positive in the near future. So but these two sectors, we are waiting for some more clarity. In terms of announcing deal pipeline, I would argue GenAI, I think it probably may not make sense because almost every deal may have a component of generative AI in it. So calling out separately that our generative AI pipeline is X may not make sense going forward. That's what is the third question you had?
Emerging markets versus North America. Like in terms of growth of emerging markets, and do you see this?
We are quite bullish on them because the emerging market, like we are seeing consistently, we've been seeing growth while India has been outperforming. We've been doing well in Middle East Africa, we've been doing well in LATAM, we are doing well in Asia Pacific other than Australia. So we are consistently. So we have a very renewed focus in these geographies and our growth has been quite good. So we are, as I said, the base is still small, but collectively they do contribute significantly to growth.
A question on the legal claim that was in Q3 of last year, and that's history. It's behind us.
Okay, because it's also in this quarter, I think.
It's not in this quarter.
Next question from Uri Malvania from Financial Express.
Hi, Milind, I would like to know if there has been any impact, positive or negative, on the way you're looking at hiring in the context of the GenAI deals.
I think I said earlier, the answer is no. I think we would continue to hire, and as Kriti said, we expect only a positive swing because of the fact that the nature of jobs will change and not the number of jobs. We don't expect the number of jobs to reduce. So we basically expect the same number of people to come or more, and train them accordingly so that they can fit into the newer kind of jobs.
So does your training then sort of
Absolutely.
see a change?
We have been doing
change.
it already. We've been doing it already. We have been telling you also that we have been basically a organization-wide training on AI, Gen AI, not just at the lowest level, but building a pyramid now to basically create a AI-first organization.
Thank you.
One last question from Ben K from the New Indian Express.
Hi, this is about the patents that you have mentioned. Can you just quantify what is the investment that has gone into?
What is it?
Or what is your annual investment in R&D?
You know the number?
So overall, we do about 1.2 to 1.5% of our revenues as an investment in R&I, and that is consistent.
1.2 to 1.5. Okay, thank you.
Big thank you to the management and to the media for joining us. There were a few journalists online who we couldn't accommodate. We'll of course try to answer those questions. Thank you to all our shareholders for joining us across all our social media platforms. Wishing everyone a very happy new year. Thank you and goodbye.
Thank you.
Thank you.